Good to go?
Yeah, I think so. We are good to go. Kishore, we should start?
Yes, we can.
So, sir, after 30 seconds, I will give you a go ahead, then we can go.
Okay, perfect.
I'm making it live, huh? 3, 2, 1, start.
Wish you a very warm evening, everyone, and welcome to the webinar for the launch of Ugro Capitals Limited public issue of secured, rated, listed, redeemable, non-convertible debentures. I, Dipen Doshi, representing JM Financial, the sole lead manager to the issue, welcome you all to this enriching session. Representing the company today, we have with us Mr. Sachindra Nath, who is the Vice Chairman and Managing Director of Ugro Capital. He is a qualified lawyer and a university rank holder from Banaras Hindu University. Throughout his illustrious career, Mr. Nath has been influential in setting up insurance companies, global asset management businesses, capital markets, and lending institutions. We also have with us Mr. Anuj Pandey, who is the Chief Risk Officer and who is a founding team member of Ugro. Anuj brings with him 20 years of experience from leading companies such as Barclays Bank, ABN AMRO, and GSK Consumer. He holds a bachelor's degree in engineering from Thapar University and is an IIM Lucknow alumni. We also have the pleasure today with having Mr. Kishore Lodha, who is the Chief Financial Officer of the company. Now, just a brief idea about the company. Ugro Capital Limited is a non-deposit taking systematically important NBFC registered with RBI, and its equity shares are listed on NSE as well as BSE. The company is engaged in the business of lending and primarily deals in financing SME and MSME sector with focus on healthcare, education, chemicals, food processing, hospitality, electrical equipments and components, auto components, light engineering, and micro enterprises segments. As of December 31, 2023, the company has 104 branches across 14 states and union territories in India. Now I draw your attention to the structure of Ugro Capital NCD public issue. The NCDs under offering are redeemable, secured, rated, and listed. The current NCD offering of 200 crores has a base issue of 100 crores with an option to retain oversubscription of up to another 100 crores. The issue opens on Thursday, February 8 and is scheduled to close on Wednesday, February 21 with an option of early close on achieving the expected subscription and subject to the regulations of SEBI. The allotment in the issue will be on first come, first serve basis, and the issue is rated by India Ratings and Research as IND-A with a stable outlook. The NCDs are offered under 3 tenors of 18 months, 24 months, and 27 months, with monthly and annual interest payment option under the 18 and the 27 month series, and staggered redemption in 8 quarterly payments of 125 each under the 24 months maturity option. These NCDs offer attractive yield in the range of 10.72% to 11.03% across these 5 series. The structure also provides 40% of the issue size allocation to retail investors up to 10 lakhs application, another 40% of the issue size to HNI individuals above 10 lakhs application, and 10% of the issue size each for corporates and institutional investor category. The issue also provides the option to retail individual investors bidding up to 5 lakhs to apply through the UPI mechanism. We earnestly appeal to all our partners to reach out to maximum number of investors in all categories and let them have this opportunity to invest in an attractive offering. Now I request the management of Ugro Capital Limited to take us through their business in detail.
Thank you, JM team. I would, make few opening remarks, and then I'll request my colleague Anuj to take you through the presentation. Ugro, right from its inception, had this institutional ownership mindset, independently supervised and a professionally managed company. Within a period of 5 years, at this start as a listed vehicle, it created a very large capital base of almost 950 odd crore. It had the backing of some of the globally acclaimed large private equity investors. After its initial capital raise, it set up its governance. Its board consists of majority independent director with some of the marquee name in the industry who represent different segments of the market. We believe that there is a market opportunity to create a scalable platform for MSME financing in India. This is a sector which has obviously starved of the credit need. The market opportunity seems to be very, very large. What we have seen over a period of last 2 decades or so, a different segment of the market actually have given opportunity to create a scale platform and solve for the problem of credit. Be it consumer financing, be it gold loan companies, be it vehicle financing business, tractor financing business. When it comes to small business financing, this sector has been largely credit starved because the underlying customer segment being more in informal segment versus lending institution being more formal segment. I think so some of this has started changing since our incarnation. When the India stack, which is what we call the digital stack around the GST, the digital banking and the bureau started maturing. And that gave opportunity to a new type of lender like us to invest very heavily in our data-led technology architecture and build a method of delivering credit to the underlying customer at a timely fashion. Over a period of last 5 years, we have not only created the scale, we reached almost 8,300 crore of asset under management. We built a very multi-channel distribution, which we'll talk about through the presentation. And last but not least, we are supported with not only very marquee equity investors, but also very diversified liability base. Some of the largest banks into the country are lenders to our on balance sheet. Some of the largest banks are also co-lending partner to us. Some of the biggest DFIs in the world are lender to us. And over a period of last 5 years, we have been able to establish not only a data tech-led lending business for MSME in India, a diversified distribution base, but also patronage of some of the very marquee liability institutions. When we look at the source of the liability, while there is wholesale liability which comes from the bank, the DFI financing, the capital market, we believe that it is our onerous responsibility to expose the public, retail public and institutional public market on debt side to also offer this opportunity to them to participate and benefit from the growth of company like ours. And that's why on a periodic basis, we have been bringing the opportunity to invest in our listed secured rated bond market. We are thankful to JM for bringing this issue to the public, and we hope that most of the market participants would find this opportunity compelling and would take it to a large investor base. Our idea is to diversify our liabilities and also diversify our investor bases, and we would like everyone into the hinterland retail investor to benefit from our creation, and some of that can only happen through your active participation. Our job is to run companies, deliver performance, but the benefit of that to investors at large can only happen through your hands, because you are the bridge between us and them. And we are hopeful that through this presentation, you will be definitely convinced that this is a compelling opportunity which you should take to all your investors at large. Anuj, over to you.
Thank you for the introduction, Sachin. Yeah, if you could come to the slide 3. So to take you all in a little more detail on our business model and on our approach to MSME lending, we are probably one of the largest data-driven lending company in this format. Today, we have more than 67,000 customers with more than 100 branches. and December end AUM of 8,364 crores. We have reached this because we have a business model and an underwriting philosophy, and I wanted to spend a minute or two on that. When we were on the drawing board, when we were starting, and the opportunity in MSME lending is very well documented and discussed. But we believed that if a format has to become scalable and tenable for a very long term, then it has to be basis data and technology as its underlying philosophy. When we were starting, we found out that if we look at the customers by the lens of the sector in which it operates and design its underwriting philosophy around that, then we will be able to create a much more accurate version of an underwriting template which can be scaled up. And that today we are on the third generation of that approach, and we call it Grow Score 3.0. This is the underlying basis which we have been able to onboard and give loans to our very large set of customers. This is at the very heart of the distribution architecture as well. We are providers of multiple kinds of loans to our chosen target segment, which is MSME. So we do secured business loans, machine finance, unsecured business loans. We have now a specific large vertical developed focused on micro enterprises. We do supply chain finance, especially focusing on retail financing to small retailers. And we have now also experimented going directly digital to small retailers, and that business is currently in a beta phase. On the liability side, we have very, very well diversified liability mix, starting from 7 out of large 12 public sector banks as lenders to us, and all the bigger prominent names across private sectors banks, SFBs, NBFCs, direct financial institutions on our books. This in a way is a testimony to what we have achieved in last 5 years, and SBI being the largest lender to us, in a way have got sort of credit tested us in multiple cycles, including the COVID cycle, which hit us at the end of first year. We can move to the next slide. And this all started with our firm belief that if we have to be successful and in a large format, we have to have corporate governance standards which are absolute industry benchmark. And we had, when we were starting, we had a corporate governance code which we transformed to articles of the company, and some of the salient features of that are in front of you. For example, we said that we will always have an independent majority board. Some of the things which we said, and which was at that point in time, not many people had mentioned that in writing, but we were so clear on what we wanted to do, we included that. We don't lend more than 1% of our net worth to a single party. We have a multi-layered credit authority delegation matrix. The key management people like the CRO or CFO can be removed only if there is 3/4 of board approval, etc. Any shareholder coming in at any given point in time, if he has more than 10% of shareholding, he automatically qualifies for a board seat. Majority of our committees are headed by independent directors. So in a way, when we were creating this company and now we have pretty much well established that the kind of corporate governance we wanted to exhibit was pretty standard. This is our current shareholding pattern currently, and this is post our last equity raise in March. 16.46% approximately is owned by IFU, which is the investment arm of Denmark government. TPG Newquest, ADB Partners, and Samina Capital are other PE investors holding about 16% and Samina 7.5%, and about 27%, more than 25,000 odd shareholders are the other public shareholders currently. We have a very eminent and large board. Our chairman of the board is Mr. Satyanand Mishra, who is an ex-bureaucrat, ex-CIC, and a very, very big name in the industry. The whole construct of the board is such that we have a subject matter expert across various stakeholders from the industry. So we have someone from PSU Bank, we have someone from insurance company, we have someone from SEBI, we have someone from RBI, we have an independent analyst, reputed analysts. And the idea is to have a board which actively participates in the decision-making process and advises us. Mr. Kandam Shekhar is the PSU representative and a very big name. He heads our risk management committee. Mr. Hemant Bhargava is ex-LIC chairman. Mr. Rajiv Agarwal is ex-member of SEBI. Mr. Karuppa Swamy is an ex-RBI ED, and Ms. Tabassum Inamdar is an ex-analyst of Goldman Sachs. Chetan, Manoj, and Deepa are the investor nominees of the respective funds which hold more than 10%. Also, the senior management is now one of the, with combined 200 years of experience, is perhaps have got together, and no other NBFC who is lending to small business format has this kind of a combination. So Amit Pandey, who is not here, Chief Revenue Officer, has more than 20 years of experience across large banks, private banks, and is a known name as far as SME lending is concerned. Kishore and Sunil are of course here in this presentation. Om is our Chief Operating Officer, has a tremendous amount of experience with AU Bank and other Big Four consulting firms. Satyan is our Chief Business Officer, specifically dedicated to micro business, and Rajni is our Chief People Officer. But when I talk about our addressable market, the way we have targeted and sliced the target segment is in front of you. We classify all our customers by degree of primeness, and that degree of primeness is defined by the quality of cash flows which we assess, the quality of collateral they are able to provide, and the quality of repayment behavior, which broadly is done through our proprietary growth scoring model. So we have a certain set of customers called prime customers, where the turnover ranges of the customer is between 1 to 15 crores. And these set of customers we cater through our top 25 prime branches. Here we give secured loans where approximate ticket size is about 70 lakhs, and unsecured loan where the approximate ticket size is about 16 lakhs. This prime set of customers currently contribute to about 59% of our total AUM. Then we have a chunk of customers which are ecosystem led, where the end use is monitored. This consists of supply chain finance and machinery loans. Here, the idea is to cater to MSMEs in large supply chain ecosystems, or MSMEs who are buying machinery as revenue-based assets. The turnover criteria for selection of these customers is also between 1 crore to 10 crore. One of the best performing portfolios of ours and a focused portfolio in future. Currently, it contributes close to 20% of our portfolio. Then, as I was talking in the introduction, we have a dedicated business vertical focused only on micro enterprises, Currently, we have 75 branches. We are opening 75 more branches in the current quarter. Here, the idea is to specifically customize solutions for micro enterprises customer with turnovers of less than 1 crore. Here, we only give secured loans and the average ticket size is 8 lakh. The current AU mix is about 9% of the total portfolio. And last but not the least, we have a large partnership and alliances channel. This typically are other smaller NBFCs and fintechs who cater to micro, unsecured, and other niche segments, which we at this point of time we don't want to do directly, but we want to gain experience. And this is done through partnership with them. Typically, these NBFCs and fintechs gives us first loss guarantee, and we share the loan exposures. Currently, this portfolio constitutes of about 12% of total AUM. We can move on. I talked about that, but in a little more detail of what our distribution channels look like. So currently in our prime channel, we have 23 branches across all the prime metro and tier 1 locations in the country. Then we have 75 branches, moving now to 150 branches in next 1 quarter. And then in ecosystem finance, I've already spoken about, and also partnership and alliances. So we can move on. I was talking in the introduction of our approach, which was sectoral in nature, and the biggest idea there was that if you look at the customer and find out the homogeneity of its cash flow, then whatever statistical rule you apply, it is likely to give you better results. So when we were on the drawing board, we chose 8 sectors. Later on added 9th in partnership with Crystal, and those sectors are in front of you. So we continue to lend to only these 9 sectors, and we think they are pretty large in size. They contribute to around 45% of the country's SMEs GDP, and they continue to grow. But it also helps us to gain much more expertise vis-a-vis other lenders in the market. Constantly, because we are collecting data from these set of customers, our ability to underwrite keeps becoming sharper. Just to give a little more flavor on how big is now the distribution network of ours, we have more than 500 Grow partners. We have more than 70 anchors in our supply chain finance. We have partnered with more than 50 OEMs for our machinery loans. We have more than 40 fintech partners in our P&A channel. So broadly, we are very large. Now we are very well diversified geographically. We are very well diversified by product and by nature of underwriting. Some of the key financial parameters are in front of you. So I was talking about that. We ended December quarter at 8,364 crores, vis-a-vis 6,081 crores at the end of March 23, which is approximately 60% growth. We have done 7,353 crores of disbursement in the first 9 months of the year, with a total income of 751 crores and a PAT of 87 crores. Total gross stage 3 assets on books is 3.2%. On our AUM, it is 2.0%. Total return on net worth at the 9-month ending FY24 is 9.7%. Over on our liability strategy, it is very well defined and pretty much well executed in a very short period of time, in 5 years. Now we are a very, very well diversified set of lenders. So we focus on balance sheet lenders. Then we are one of the pioneers of co-lending as far as MSME lending is concerned. And we have a lot of FIs whom we deal with, from securitization and assignment perspective. A little more granular detail on how our liability book has grown. So at the end of December, our total on-book borrowings were 4,173 crores. And out of our total AUM of 8,364 crores, 45% was off book. And the stated intent is to be 50% off book as we move forward. In terms of liability mix, 70% of our total liabilities are term loans, and the rest is broken up between NCDs, securitization, CPs, and cash credit. The total, I mean, we talked about that, but very quickly, just to give you a summary for FY24, total income was 751 crores. Net total income after interest expenses was 436 crores. Credit cost was 75 crores. And total PAT at the after tax is 86.7 crores. I think we sure you want to highlight anything specific from balance sheet, otherwise we can move forward.
We can move forward.
You can talk about the, although Deepin had explained that, the structure at the start.
Would you like to take it?
So we can finish the presentation. I will take it at the last.
This is, I think, the last slide.
Yeah. Okay. So I think so. Then first we'll take any question answers, Mayur. We'll wait for a minute, sir, if there are any questions, sir. Yeah, Mayur, just hold on. Yeah, just wait. Yeah, so this is the question. I think so. We all can read it on the screen. Yeah. So where will be the fund raised by the public issue where it will be used? So we can answer that. So I can answer that. So basically, as per the document, the company proposes to utilize this funds basically after deducting the expenses for 75% of the issue is for onward lending and financing the business. And another 25% will be for general corporate purposes. Yes, sir. The question is how old is the company and what are the existing debts and who are the promoters?
If I may take that, so Ugro is actually as an incorporated entity. It is a company in existence since 1992. It got reinvigorated, wherein as a founder, I took the control of this company on 5th July 2018. And on the same day, there was a preferential allotment done to, last set of private equity, four private equity investors. In technical terms, because it was an existing listed company whose control was taken over by me and made an open offer, I got defined as the promoter of the company. But in reality, this is a professionally managed company. My ownership as a promoter into this company is merely 2.18%. This is largely an institutionally owned company. Almost 65% of our ownership in hand of global private equity investors and DFIs. Balance is with public share, retail public shareholders, high net worth individual, so on and so forth. Existing debt, Kishore, you want to take that?
Yeah, so as on 30th December, our total debt on balance sheet is approximately 4,200 crore distributed between term loan, NCDs, commercial paper, securitization, etc. So roughly, as Anuj explained, that 70% of the borrowing is from term loan. Out of this, 43% is from bank and rest of it from financial institution, development financial institutions, domestic financial institutions, NBFC and others. And rest 24% is from public NCDs and private placement of NCDs, and balance 6% would be from other sources like commercial paper, cash credit limit, and etc. The largest lender is State Bank of India. Some of the largest other large public sector bank, Canara Bank, Indian Bank, are our lenders. Some of the large private sector bank like HDFC, Kotak, etc. are our lenders. Some of the largest global DFIs, including FMO Netherlands, ADB, Calvert, and domestic financial institutions like SIDBI are our lenders. Hope that answers.
Yes, sir. Thank you. Yeah. The question is, so what will be the Ugro's capital strategy to compete with increasing competition?
I'll take this. I think so. If you look at the addressable market opportunity for MSME financing in India, the reported demand is roughly around 90 lakh crores, of which the formal credit to this segment of the market is only 20%. So there is a credit gap for formal credit to MSME is in the tune of 50 lakh to 60 lakh crore. So not only Ugro, but I think so it gives an opportunity for multiple similar lenders to create fairly scaled platform. The degree of difference is in terms of focus, segment focused, and how do you penetrate to that market. Ugro had followed this strategy to focus on customers which are in the turnover band of 15 lakh to 15 odd crore. It has automated the credit by use of the data coming out of GST banking and bureau. It has built, as we have shown through presentation, a very deeply diversified distribution channel which cut across every ticket segment and every kind of product or borrowing need of our customer, which varies from 25 plus branches in prime locations, 75 plus location in our micro enterprises location, financing for small machinery, financing for retailers, do lending through multiple partners, so on and so forth. So while there are many new numbers of lender would keep emerging, but given our sheer focus of only MSME financing for our targeted customer segment, we continue to believe that we have an opportunity to build a strong, sustainable, resilient platform and solve the problem of credit for MSME in India.
Thank you, sir. The question is, what's your overall exposure of the loan book, secured versus unsecured loans?
I can take that. So our overall unsecured loans are about 25% at the end of December. So we divide the portfolio composition into three parts. One is secured loans. Other is what we call quasi-secured loans, which is loans which are covered by either CGT-MSE or FLDG, and which are and that last part is which is unsecured loans. So unsecured is 25%, and the rest is either secured by property, by machinery, or by CGT-MSE, or by first loss cover. Hope that answers.
Yeah. So the next question is, what's the net interest margin and debt to equity ratio?
So since we are very heavy on co-lending, our net interest margin looks very high. And if you look at on the balance sheet level, it is approximately 14% as on 31st December. If you look at AUM level, it is closer to 6.5, 6.7%. And as far as debt equity ratio is concerned, we are fairly under-levered at this moment. Our equity is roughly 1,400 crore and debt is 4,200 crore. So leverage is just about 3 times.
Thank you, sir. The question is, what is the cost of borrowing and even lending to customer? I think so.
So cost of borrowing is closer to 10.6% as of now. So cost of, as you know, that cost of borrowing has been increasing for some time since RBI has increased multiple times the repo rates, and last 1 year there has been no decrease in repo rate, but the liquidity has been tightened through withdrawal of accommodation stance. But we can hold on the rates as the organization is maturing and the lenders have a greater trust with us. So it is closer to 10.6, and our average lending rate would be closer to 16%.
Thank you, sir. Yeah, I think so. That ends the question. Kishore, we can just have the, we'll just explain the issue structure. Can we just have the issue structure slide?
May I please put up the issue structure?
So thank you very much, sir. We had, in fact, a very great, detailed and precise presentation from the management of Ugro Capital. Now, I just request all our partners, since we have heard about the attractiveness in the offering of Ugro Capital Limited public issue of NCD. We request your wholehearted support by reaching out to all the segments of investor class, especially the retail ones. You may also reach out to the issuer lead managers or any of the consortium member for any further clarification or information if you require. And I will once again, for the benefit of all, just reiterate the issue details. The NCD under offering are redeemable. It's a secured, rated and listed NCDs. The issue size is of 200 crores with a base issue of 100 crores and a green shoe option of another 100 crores. We open the issue day after tomorrow, that is on 8th February, Thursday, and we are scheduled to close on 21st February, but definitely with an early option of early close as per the regulations by SEBI. The allotment will be on first come, first serve basis. The issue is also rated as with a stable outlook from India Ratings. And we can see in front of the screen, basically, there are 5 options or 5 series of the issues. And the issues NCDs are offered under 3 tenors, 18 months, 24 months, and 27 months. The 18 months and the 27 months tenor has an option of monthly as well as annual interest payment. And for 24 months, we have a series of staggered redemption in 8 quarterly payments of 125 each under that option. The range of NCD offering yields are in this range of 10.72% to 11.03%. And 40% of the issue size is earmarked for retail investors. Another 40% is earmarked for HNI investors, and 10% each for corporate and 10% for institutional investor category. We also provide the retail investor the benefit of bidding up to 5 lakhs through the newly appointed UPI mechanism. So I thank you again once all for taking time to attend this session, and we shall always look forward for your wholehearted support, as always has been the case. Thank you. Thank you, management team for Ugro Capital. Thank you, partners for JM Financial. Thank you, Mayur. Over to you.
Thank you.
We conclude the session.
Sir, we can all disconnect, sir. We have ended the
Okay.
session. Yeah, we'll send you the record. Yeah.
Thank you.